Foreclosure can be a terrible experience for a homeowner. It not only puts the homeowner at risk of potentially losing their home, but it may also damage their credit score and make it challenging to obtain new loans and credit in the future. Are you a homeowner in danger of foreclosure? Don't worry, I'm here to help. In this video, I'm going to show you exactly what to do to avoid foreclosure and keep your home. Hey homeowners, I'm Erica Parker, and I know that you're probably feeling really scared right now. I know what it's like to go through a sudden hardship and wonder how you're going to make your next mortgage payment and if there's any way out of this mess. But don't worry, there is hope. In this video, I'm going to show you those exact steps that can get you out of foreclosure and keep your home. So stay tuned because this is going to be helpful for all of us. Foreclosure is a process that occurs when a homeowner misses payments on their mortgage and the lender takes action to recoup the money owed by repossessing and selling the home. This process can take several months or even years to complete, but it ultimately results in the homeowner losing their home to the lender. Foreclosure is something no homeowner wants to go through, and in most cases, the failure to make mortgage payments is due to an unexpected dip in finances or a change in the owner's circumstances. A home may go into foreclosure for a variety of reasons, including loss of employment due to getting fired, laid off, quitting, or being unable to work due to medical reasons. It could be unexpected medical expenses, divorce or separation, or unanticipated costs associated with home maintenance. It is important to remember that foreclosure is not always inevitable, and fortunately, there are ways to avoid or postpone your foreclosure if you find yourself in this situation. Therefore, it is essential to take steps as soon as possible to avoid or postpone that foreclosure so that you can protect your credit score. By following the steps mentioned below, you can save your home from foreclosure or at least buy yourself some time to figure out a plan. First, you want to identify if your current hardship is a temporary or a long-term hardship. If this is a short-term hardship, then you may have more options at your disposal. Every situation is unique, and therefore, I'm going to give you a broad list of options. However, some of these may not be available to long-term or permanent changes in our lives. Once you've determined whether this is a short-term or a long-term change, you should contact your lender. It's always best to contact your lender as soon as you realize that you are unable to make your mortgage payment, so that you can discuss the options available to you from the lender's perspective. Lenders are not in the real estate business, and foreclosing on a home is really not their preferred option. Here are 10 options to avoid foreclosure. Your first option is to request a postponement. This is the logical next step to getting your sale date pushed back. Call your lender and ask them to postpone the sale date. Then keep in touch with them and keep the lines of communication open. Many lenders have websites that include assistance pages for those facing foreclosure. Visit these and see what steps are available to you from them. While some mortgage holders are indeed indifferent and cold, there are many on the other hand that are not. The smart ones understand how important word-of-mouth advertising can be and how effective compassionately helping out their customers is for earning trust and gaining future customers. Option 2 is to ask for forbearance of a loan payment. Forbearance of loan payment refers to temporary financial assistance that your lender can offer in cases of hardship. This may include temporarily reducing or suspending your loan payments, which can help you to avoid foreclosure during periods of financial difficulty. However, it is essential to note that this will typically only be offered for a limited period. You will be expected to resume making regular loan payments once the period ends, or possibly making the full payment of the months that the loan was in forbearance. This will still harm your credit score, but it is better than foreclosure. Option 3 is to reinstate the loan with personal funds or borrowed funds from friends and family. This means that you will need enough money to pay off the entire delinquent amount and bring your account current. Ultimately, the best option for avoiding foreclosure will depend on your financial situation. However, it is crucial to take a close look at your finances and see if there are any ways to improve your situation. This includes your savings accounts, your 401ks, and any investments that you can liquidate to pay off the amount. If you can make up any of those missed payments and bring your account current, this may be the best option for avoiding foreclosure. However, remember that this process can be costly and you may incur additional fees and penalties. You may also want to borrow funds from friends and family to cover the missed payments and get current on your mortgage. This can be an effective way to avoid foreclosure in the short term, but it is essential to consider the long-term consequences of this decision carefully. Often with a friend or family loan comes expectations of repayment, as well as the person feeling entitled to tell you what to do with your life. Sometimes getting a loan from friends or family can be more of a headache than you want. Option 4 is to request a loan modification or repayment plan with the lender, which can help reduce your monthly payments. Different modifications include reducing the interest rate to lower your monthly payments and make them more manageable, extending the loan term to help reduce your monthly payments, making it easier to keep up with your mortgage payments. However, this may actually mean paying more interest over the long term. Or the third is deferring some of your costs until a specified date. You may be able to defer costs such as property taxes and insurance until a later date. This will help you stay current on your actual mortgage while also reducing your monthly payments. On the other hand, with repayment plans, you can work out a manageable payment schedule with your lender. This can help you avoid foreclosure by giving you more time to pay off your debts. 5 is apply for loss mitigation. Another option to consider is loss mitigation, which refers to financial assistance that may be available from governments or your lender. This can include programs such as the Home Affordable Modification Program, which provides help to struggling homeowners. Through these programs, you can lower your monthly payments or delay foreclosure proceedings. These first 5 options are your possible ways to avoid foreclosure and stay in your home. These next 2 options are ways to delay foreclosure, but will not stall it indefinitely. Number 6 is to file a temporary restraining order on foreclosure. Sometimes delaying or even avoiding foreclosure may be possible by filing a temporary restraining order. This can involve asking the court to stop foreclosure until a settlement or other resolution is negotiated. However, it will not necessarily stop the foreclosure process if you do not reach an agreement with the lender. Number 7 is to declare bankruptcy. If all else fails, you may consider filing for bankruptcy. It can help protect your assets from creditors, but it can also harm your credit score. It is one of the best last-minute strategies to avoid foreclosure. For example, if your foreclosure sale is scheduled within the next few days, filing for bankruptcy is the best way to stop it immediately. The automatic stay will halt the foreclosure proceedings. When you file for bankruptcy, automatic stay means that it takes effect immediately. The stay acts as an injunction preventing the bank from foreclosing or attempting to collect the debt. As a result, all the foreclosure activity must be halted. Now, a bank may file a motion to vacate the stay. A bank will almost certainly try to have the stay lifted by filing a motion asking the court for permission to proceed with the foreclosure. Even if the bankruptcy court grants this motion and allows the foreclosure to proceed, it will be delayed by at least a month or 2. This should give you enough time to talk to your bank about alternatives to foreclosure. And as a side note, declaring bankruptcy can affect one's credit score for 7 to 10 years. Now, sometimes a change in circumstances is not temporary and will require the hard decision of moving out of your beloved home. If this should be the case, I strongly recommend that you face the inevitable sooner rather than later. Otherwise, you could lose all of your equity and leave yourself in potentially a worse situation and unable to even rent a property due to your low credit score. Therefore, the following options are 3 ways to avoid foreclosure by not keeping the home. Option 8 is to sell your home for retail or market price. This can help you to avoid foreclosure and get you cash in hand, even if you need to sell the house for less than market value. In order to get market value, you need to be honest with yourself about the condition of your home. If it's in need of little to no repairs, then market value is potentially attainable. When selling the house retail, you could potentially sell it for a profit or be required to sell it as a short sale. Selling for a profit can allow you to pay off the loan balance and walk away with proceeds to buy a new home that you can afford comfortably within your new set of circumstances or potentially rent a house. On the other hand, you may need to do a short sale. A short sale is an agreement between the borrower and the lender to sell the property on the market. The home is typically sold for less than the outstanding mortgage balance plus fees, with the difference typically being owed by the borrower to the lender and ultimately usually being written off by the lender. It is preferable to foreclosure because the borrower will be able to control the sale terms, directly put the house on the market, get a higher price than you would typically get at a foreclosure auction, prevent a foreclosure notice from appearing in the newspaper. You should be able to also avoid the foreclosure being reported on your credit report. This type of sale does usually affect one's credit for 4 to 7 years. Should you need to do a short sale, it is important to hire a realtor with knowledge on how to perform a short sale and that can work with the banks. Option 9, sell your home to an investor. Selling your house to an investor can be a great option if you need to sell your home quickly. An investor will buy the property in its current condition. Investors can usually provide you with two main offers for selling your home: a cash offer and a subject to offer. In a cash offer, an investor will typically be able to offer you a cash price for your home much lower than what you would receive from a retail buyer. However, an investor can be a great option if you need to sell quickly and are willing to accept a lower price, or if you don't have the funds necessary to make the repairs needed in order to get retail price. In a subject to the existing mortgage offer, an investor will offer to reinstate the loan and take over your mortgage payments. This is beneficial because they start making payments to the lender on your behalf, and it can drastically improve your credit score. However, they will require that you deed the property to them and likely move out. That being said, if you have remedied the hardship situation but the bank is unwilling to provide any remedies, investors, especially passive income investors, may be persuaded to allow you to stay in the home and rent from them, so long as you can show that that hardship was temporary. Finally, option 10 is a deed in lieu of foreclosure. A deed in lieu of foreclosure is an agreement between the homeowner and the lender. It allows the homeowner to voluntarily surrender the deed to their home to the lender, thus avoiding foreclosure. This will still harm one's credit score for around 4 years, but it is typically less damaging than going through the short sale, bankruptcy, or foreclosure processes. This option's advantage is that it allows the homeowner to avoid some of the fees associated with foreclosure and may enable them to get financial incentives from the lender like cash for keys. However, it is essential to note that not all lenders accept deeds in lieu of foreclosure, and it is best to speak with your lender about this option before proceeding. If all else fails, it may be beneficial to seek legal advice from an experienced attorney who can guide you through the foreclosure process. An attorney can help you understand your state's laws and can also help to negotiate a settlement with the lender. It is important to remember that you have options when facing foreclosure, and taking advantage of these alternatives could save your home and provide financial relief. Take time to explore all available options before making any decisions. You can find the best solution for your unique situation with research and professional guidance. Should you have any questions or want to set up a consultation with my team about your options, please contact me at info@bestlifetexas.com. Good luck and bye for now.